It's almost a mirror image of what we saw on Friday, where the small end of the market has been even more extreme than the large end of the market, and the tech stocks that were getting hit pretty hard have bounced back strongly today. We will see as we go through reporting season whether the renewed optimism is justified or not, but it has been a particularly volatile couple of weeks for equity markets.
What's your view? Have those fears about AI taking out the software sector gone away?
They've definitely not gone away. I do think the fears are overcooked in terms of how much it's going to impact on these businesses. I also think they generally started at very, very expensive valuations. So I think you could have taken 30% off the prices a year ago and said, well, this is just getting you back to fair. It's got more extreme than that. For us, that makes it more interesting. But we're still not buying widely in that tech space yet. It could, hopefully for us, get a bit more attractive in terms of entry prices from here.
Okay, so you're buying the dip. Who else is buying the dip? Investors who thought tech was way too expensive.
Yeah, and look, I think there's a lot of passive and index-based money flowing out there now. So it's not necessarily I want to buy this company and I want to buy that company, but I want to put some money into a tech ETF, and then that ETF goes and buys every single company in the space. So we have not seen a lot of discrimination on the way down between different businesses that might be affected by AI more than others. It's been a wholesale selling. And what you've seen today is a rebound pretty much across the board as well. I do think as we go through the next 12 months, there'll be winners and losers, and you'll see a lot more differential share price movements.
Well, what about those fears about the size of the AI build-out and when investors will see returns? Do you think we're starting to dismiss that talk that was ever present last year of an AI bubble?
I think there are still a lot of concerns about that. And again, I think through the course of 2026, there will be questions asked about how what is going to be now trillions of US dollars being invested in data centers and the like is going to generate the returns. I will say we're seeing a lot of practical applications on the ground, though, even in our own business, that, wow, this is an enormously powerful tool and we would be willing to pay quite a bit of money for it. So I think you'll see concerns all year. I also think you'll see business models come out where people go, okay, I can now see how that investment is going to generate an appropriate return. And I think we've got years of CapEx build out here, absolutely no matter what. And all of the companies that are benefiting from the build itself, like contractors and construction companies that do data center work, they've got years of backlog ahead of them at very, very healthy prices and margins.
Now, the ASX made up all the losses from last Friday today. Do you think we're going to see a bit of a volatile ride through earnings season? It's earnings season in the US, it's reporting season in Australia. Could it be volatile?
I would say the lesson out of the US has been it almost doesn't matter what the company reports. These waves of sentiment around certain sectors and industries are driving returns no matter what. We saw a lot of tech companies beat market expectations through this reporting season in the US, and still the share price got hammered. I think we'll see a bit of that through this reporting season, that what's happening at a macro level is probably going to be more important than the micro level. For investors, that can be a great opportunity. I think the businesses that are doing well and sentiment is the only thing that's holding the share prices down, that's where the opportunities to make money over 5 and 10 years exist.
Steve, just quickly, Japan's share market has risen sharply after Sunday's election. What does that result say to you?
Hopefully, stability is the word. It's been a lot of political turmoil in Japan for a long time now. We have a lot of our international portfolio invested up there, and I'm really enthusiastic about some of the trends that are underway. And the political environment has hurt the rollout of the reforms and things that we've seen. And they've still been happening, and it's still been helpful from a share market perspective. So I think some stability here will mean that those reforms continue, maybe even accelerate, and that should be very good for the stock market up there.
Steve Johnson, thank you.
Thanks for having me.